Welcome back. And in our top business story today, non-resident deposits at banks in the UAE increased by 19.6% year on year to reach 158.5 billion dirhams at the end of the third quarter of 2015, benefiting from tax-free interest rates according to the latest findings. Officials from the National Bank of Abu Dhabi were quoted saying, "Commercial institutions account for the highest share of non-resident deposits, while customer deposits of resident and non-resident customers also increased by 1.6%, reaching 1.44 trillion dirhams. Resident deposits decreased by 0.3% year on year, reaching 1.27 trillion dirhams at the end of Q3. Bank assets and loans between the end of the third quarter of 2015 rose 4.8% to 2.42 trillion dirhams by the end of September, mainly brought about by a 7% increase in credit, reaching 1.48 trillion dirhams. The Dubai World Trade Center has awarded Al Futtaim Carillion a $196 million construction contract to deliver phase 2 of its Dubai Trade Center District project. The mixed-use development covers 535,000 square meters of gross floor area, located between the current Dubai International Convention and Exhibition Center and Jumeirah Emirates Towers. According to a statement, the contract has begun and is scheduled for completion in Q3 2017, which is made up of 2 Grade A office properties of 8 and 12 stories. According to reports, Al Futtaim Carillion is currently nearing completion of the first phase of the development, which comprises of an 8-story office building and a 588-room business hotel. This takes the overall value of Al Futtaim Carillion's work at the DWTC development to around 1.2 billion dirhams. Average room rates across 4- and 5-star hotels in Dubai fell 2.3% in September this year to $207.55, as according to the latest figures. The latest Hotstat survey also shows occupancy levels remain stable at 76.6%, only marginally lower than the same period last year. It added that the reduction in revenue per available room was compounded by significantly lower food and beverage revenues, which fell 19%. This drove total revenue per available room 8.1% lower to $282.55 for the month. Meanwhile, gross operating profit per available room fell by 8.7% to $84.66 due to slightly higher operating expenses. Despite a lack of new supply, residential rental growth over in the capital slowed in the last quarter of the year, indicating rents are nearing an affordability ceiling, particularly at the higher end of the market. That's according to the latest findings from Abu Dhabi Islamic Bank. The bank's latest Abu Dhabi Real Estate Market Overview report, along with its real estate advisory subsidiary, MPM Properties, found that rents at the top end of the market grew 1% in Q3, despite a lack of vacancies and new supply in the high-end luxury sectors. Despite the slowdown, developments in the high-end segment have seen year-on-year rental growth of 7 to 10%, meaning many tenants will still face sizable increases at lease renewal. Additionally, just over 1,250 new apartments entered into the rental market in the third quarter, including 900 apartments in Gate Towers that have just been released by the Abu Dhabi government. The report added that property values in the residential market have, in overall terms, remained stable in Q3, reflecting low transaction volumes in the secondary market. The only exception has been Al Reef downtown, where values have risen by up to 5% for some unit types, highlighting that investor demand is weighted towards the affordable end of the market, driven by attractive rental yields. The report revealed that in the office segment, more subdued activity has been balanced by a lack of new supply entering the market, resulting in marginal rent increases of 1 to 3%. Additionally, Abu Dhabi hotels saw rising occupancy rates throughout the third quarter, driven by growth in tourist arrivals from markets like China and the US, according to the same Abu Dhabi Islamic Bank report. Overall, hotels have witnessed a 14% increase in total revenue off the back of a 20% increase in guests year to date. The third quarter also saw an increase in all major indicators for hotel apartments, with average guest spending at deluxe hotel apartments even outstripping that of five-star hotels. Low-cost carrier Air Arabia announced a record net profit of 472 million dirhams for the first 9 months of 2015. According to the airline, turnover reached 2.87 billion dirhams for the 9 months ending September the 30th, an increase of 2% on the same period last year. Passenger numbers increased by 11% year-on-year, reaching 5.7 million, while the average seat load factor for the period stood at 79%. Revenues for the third quarter of the year increased by 6% to stand at 1.1 billion dirhams, compared with 1 billion dirhams in Q3 2014. Net profit for the period reached 235 million dirhams, 6% lower than the corresponding 2014 figure of 251 million dirhams. More than 2 million passengers were served in the third quarter of 2015, an 18% rise on the year before, while the average seat load factor was 80%. Sheikh Abdullah bin Mohammed Al Thani, the chairman of Air Arabia, said that the company continued its expansion throughout 2015 and launched 21 new routes this year, and that they remain focused on expanding operations and entering new markets. Air Arabia's global destination network now covers 115 routes.